guys, welcome to HDA Trading Empire. Now in today's lesson, we will have a deep dive into support and resistance in forex trading. I'll take my time to explain what support and resistance are, and we'll learn how to draw support and resistance. If you are ready for this, please subscribe to the channel and turn on the notification bell to stay updated with every video and educational content I drop. See you. Times as traders, we know that in an uptrend we are supposed to buy and in a downtrend we are supposed to sell. Since we know that, now we are looking for certain areas in the trending market or ranging market to buy or sell, and that's when support and resistance comes in. Now when we talk about support and resistance, there are areas where buyers and sellers are looking to trade. These areas are major turning points in the market, so it's very simple. Guys, when we talk about support is an area where buying interest is expected to be strong enough to prevent the price from declining further. So now let's assume that we have this, right, and price is dropping downward. So price is dropping downward, price is continuing dropping downward, and now price gets to this key zone here, which is represented with a yellow box here, which I've drawn here. Now price gets to this point here. Now you notice that price fails to continue downwards. Price doesn't move downward again. So all of a sudden you see price moving upward. Price is moving upward. So now this particular zone or this area, which is known as a support zone, helps price to move upward. So this zone helps price to move upward, right? So it's very simple to understand, very simple to understand. So now just keep in mind that a support area is where buying interest is, or a support zone is where buying interest is. That's where buyers are looking to buy an asset. It's very simple. So you see sometimes price dropping further, and when price gets to this support area, you see price moving upward again. So that's where buyers are interested. Now guys, looking at a resistance level also, it's an area where selling interest is expected to be strong enough to prevent the price from moving upwards or advancing. So now you notice that sometimes the market is moving upward, price is moving upward, then all of a sudden price gets to a particular area or zone, then you see price dropping. The value of an asset is dropping, so you see the pricing of that particular asset dropping. So that particular area is responsible for making price to drop, and that area is known as a resistance level. So now we move on further to look at support and resistance in the different market types. That's a ranging market, an uptrend market, and a downtrend market, and we'll look at how to draw this support and resistance levels. We'll start with a ranging market, spotting support and resistance on a ranging market. So now in a ranging market, we know that a ranging market has equal highs and equal lows, right? So if you don't understand anything concerning a ranging market or market structure, I've made a video on market structure, and the link is in the description box below. Tap on it to get access to the video. So now continuing with what we are doing here. Now a ranging market has series of equal highs and equal lows, right? So starting with the supports here. So for a support, identifying your support zone or drawing your support zone here, we first have to identify the equal lows, right? So now in this scenario here, you notice that we have a low here, right? We have a low here, we also have another low here, and we also have another low here. So now after you've identified your equal lows in a ranging market, what you are going to do is that you are going to take your rectangle tool. So this is what you do. You take your rectangle tool here, then you draw on the equal lows here. So you notice that there's an equal low here, and the box must be a reasonable one. It must be a reasonable one. So now you notice that we've identified our support. So the support must just cover the equal lows. When drawing your support, it must cover the equal lows. So now moving ahead with the resistance level. So for the resistance level, first of all, what you have to do is that you have to identify the equal highs. So you notice that we have a high here, and we also have another high here, and we also have another high here. So now we are going to take our rectangle tool and draw it through those highs, through those equal highs. So we take our rectangle tool here, then we draw our box, which must be a reasonable one. So now I notice that we've been able to identify our support and resistance level. So like we all know, we always sell at resistance level and we always do what? Buy at a support level. So in this scenario, you currently note that price is at resistance level, so we tend to sell at this level here, and when price comes down, price is coming down. So in case you want to buy, you will wait patiently for price to get to the support zone, which is this key zone here, and when price gets there, you do what? You place your buy trade and buy. And in case you want to sell, you wait patiently for price to get to the resistance level, then you sell in the market. So it's very simple for a ranging market. Guys, we take a real example on USD CHF concerning a ranging market. So now in this example, if you look at USD CHF, you will notice that the current trend of the market is a ranging one. The market is ranging, right? So now, like we said, a ranging market has equal highs and equal lows here. So you notice that there is a low here and there's another low here also. And notice that it has a high here also, then it also has a high here also. So that's perfect, which is simple for us to draw, right? So now that we've done that, I always encourage traders to zoom out their chart in order for them to get a clearer picture. So sometimes when you're finding difficulties in drawing your support and resistance zones, what you have to do is that just zoom out the chart and take your rectangle tool. So for our support level, we are going to, like I said, we always draw our support at the equal lows. So now you notice that we have this equal low here and another equal low here. So that's where the blue dot is pointing at. So we have this low here and we also have another low here. So what we are going to do is that we are going to draw our support zone to pass through those lows we see over there. So now we draw our lows. We draw our support level. We draw our support level here. So now we have our support level here. So now for our resistance level, what you have to do is that we also spot the equal high. So you notice that we have a high here, then we also have another high here. So let me try and zoom in my chart so that I get a clearer picture. So you notice that we have this high here, we have this high here, and we also have another high here. So that's where my arrow is pointing at. So now that we've been able to spot that, we are going to take our rectangle tool and do what? And draw our resistance zone to pass through all those highs or equal highs. So now we've done that over here. So it's very simple here. It's very simple, very simple. So now you notice that when price got to this support here, now you can see that price is pumping upward, and there is a likelihood of price getting to this point here, and we see price dropping from this level here. So it's very simple. It's very simple, and this will help you in your analysis. So you notice that in this scenario here also, you notice that in this case here, when price got to this particular level here, which is our resistance level, price moved downward to this support level here, and we are now seeing price moving upward. We are currently seeing price moving upward, and there is a likelihood of it going to touch our resistance level. Then we see price doing what? Dropping. Move on to a trending market, spotting support and resistance in a trending market. So now, one thing you have to note about a trending market is that for an uptrend, it has a series of higher highs and higher lows, and for a downtrend, it has a series of lower lows and lower highs. So now for a trending market, we always draw support and resistance we always identify support and resistance at swing points. They are mostly drawn at the swing point, right? When we talk about swing points, now swing points are turning points. They are turning points. So in this scenario, you see that I've drawn how swing point looks like. So these are the points noted as swing points. So this point here, this tip here is known as a swing point, and this particular tip here also is a swing point. So let me do it well. This point here is also known as a swing point. So you notice that it's a turning point. The market was first moving downward here, then it later changed direction, moving upward here. So this tip here, or where it changed direction, is known as a swing point. And if you look at this example here, you notice that the market was moving upward, price was moving upward, then it changed direction at this particular point here, then we saw it moving downward. So this point here is known as a swing point. In an uptrend, we'll be dealing with support, more of support, because you are looking for buying opportunities in the market if the trend is upward. So now we talked previously about swing points. So now in an uptrend, it has a series of higher highs and higher lows. So we'll be drawing these key zones or support at the higher highs and the higher lows. So now you notice that we'll draw our key zone here. So this point here, this particular point here is a swing point. This particular point here is a swing point, and this particular point here is also a swing point, right? So now we just take our rectangle tool and draw our zone here, which is a support zone, because we'll be dealing with support a lot since it's an uptrend. And we also take it again, then draw it at the swing point. So here is a swing point, here also is a swing point, here is also a swing point, here is also a swing point, but we are looking at the current swing point. So you notice that in this scenario, the current swing point is this swing point here and this particular swing point here. So now we draw it here. It must be a reasonable one. So now that we've drawn our key zones or support zones at the swing point, so now as traders, we'll be looking for buying opportunities on this key zone here, on this particular key zone here, or this particular key zone here, right? So it's likely that the market will drop down to this key zone here, then we look for buying opportunities on this key zone here. Or sometimes the retracement can be so deep that it can just move downward. It can just move downward to this key zone here, then continue upward. So that's how sometimes it looks like. So this spotting our support. So this support. So we'll be spotting two support zones in an uptrend, and they must all be drawn at their swing point. So now let's assume that now price decides to take this particular support here. So when price takes this support here, now let me get this one to show you something. So when price decides to take this support here and we see any buying confirming candle and start to buy our pair, now what we are going to do is that you realize that we also have another swing point here. We have another swing point here. So what you are going to do is they are going to take your rectangle tool again, then draw at this swing point here also. We draw at this swing point here also. So since it is an uptrend, we are looking for buying opportunities in the market. So we wait for the market to move upward, to break above this key zone here, or this support zone we've drawn here, then wait for a retracement or a correctional move to this zone here, right? We wait for a correctional move to this zone here. So once that the market comes here in that order, then we take our rectangle tool again, then we draw again in that order. Draw again. Yeah, for market to break upward. We wait for market to break upward. Then sometimes the market can decide to use this particular support here in that order. So sometimes there can be a case whereby the market is not going to touch any of the zones. So what we are looking for as traders is that we want to see the market touch this zone or this particular zone here, right? We want to see the market touch this zone here or this particular zone here. So sometimes the market can just come in between the two zones here. If the market comes in between the two zones here, we are not going to trade, because we want to see the market touch the support zones. If it hasn't touched it, then we are not going to trade. So it's very, very simple. So assuming this also, then we take our rectangle tool again. We take our rectangle tool here, then we draw our support level here, right? So once we draw our support level here, now you notice that the market is making an impulsive move here again.
So now you realize that here now becomes the latest swing point. So whenever the market retraces and decides not to touch the retracement falls between this key zone here and this key zone here. So now you are going to draw the key zone here at this current swing point here. So you notice that this is the current swing point here. Then we get rid of this swing point here and this zone here and this zone here. Right, so we now deal with this and this in that order. Then we wait for the market to do what? To move upward again. And when the market still comes in between it, then we take our rectangle tool again. Then we draw at this point here. Then also draw at this point here. Then we wait for the breakout upward here. Then wait for the retracement for the market to touch this zone. If we get any buying confirmed candles, we buy. Or in case the retracement moves down to this key zone here, if we get any buying confirmed candle, then we buy. So it is very, very simple. Very simple. Now guys, we take a look at a simple example here, and in this example I'll be playing the charts for you guys to look at it. So now if you look at this current trend here, you notice that the market is kind of in an uptrend here. So now since it is in an uptrend, we have to take our rectangle too, because you are looking for buying opportunities. Then you notice that this point here is a swing point. So we draw our key zone here. Then draw another key zone here. So we are looking to buy on, we want to see price push upward on any of these zones. We want to see the retracement get to any of the zones, either this zone or this particular zone here. Then we see the market pushing upward. So let's play it and see. So when we played it, now you notice that the retracement rather go to this particular zone here. So now let's see. So now you notice that we have a swing point here. So we are going to draw our key zone here. Right, so now let's play the charts and see. So the thing is that we are going to get rid of this key zone here, the one in the middle now. So we are going to get rid of this key zone here. So now we tend to have this and this one. So now let's play the chart and see. Now I see price pushing upward. So now I see that price was interested in this key zone here, and you see now price is pushing upward. So now we have another swing point here. Notice that we have another swing point here. So we get rid of this one. So we are interested in this swing point here and this particular swing point here. So now let's play. Now we see price pushing upward. So now I realize that price pushed upward here. So let me try and reverse it back here for you to see. I realize that price pushed upward here. So we are looking for price to return to this key zone here or this key zone here. So let's play it and see. Now in this scenario here, you notice that price came in between the key zone here. So it came in between these two key zone here. So you notice that the swing point is in between this key zone here and this key zone here. So this is the swing point here. So now we get rid of this we get rid of this one and this one. So now we tend to get a key zone. Our current key zones becomes at this swing point here. Then we get another one here also. We get another one here also. So it's very simple. Just keep on practicing. If you don't understand anything, you can just come back and watch the video. So you notice that in this same example too, the swing point came in, this particular swing point came in between this key zone here and this key zone here, right? But our main interest is to place our buy entries on the key zones. But I notice that the retracement came in between this key zone here and this key zone here. So now our new retracement comes here. Our new key zone comes here. We get our new key zone here. Then get rid of this key zone here. Then we also have our key zone at this particular swing point here. So now let's see. We want to see the market push upward. So now that's it for this. In this current situation. You see that the market changed its trend. So it's very simple. I'll urge you to be practicing. And in case, one thing I always tell my traders is that if they want to get a clearer picture of the market or of the trend of the market, they should just zoom out their charts. So what I mean by zoom out is doing this. So if you do this to your chart, you are able to get a clearer picture of the trend of the market.
Guys, you also look at a downtrend. So with a downtrend, we'll be dealing more of resistance because we are looking for selling opportunities in the market and we sell at resistance levels. I hope you are getting me. So now we always draw these resistance levels at a swing point since it's a trending market, and I've already spoken about what swing points are. So now you notice that we have this swing point here. So first of all, what you have to do is that we have to identify the current swing point. So this swing point here and this swing point here, those are the current swing points. This swing point is not current, this swing point is not current. So now we tend to take our rectangle tool and draw our resistance level here, then take another rectangle tool, then draw our resistance level here, right? So we are looking to sell on any of these zones here. So we want to see the market retrace to any of these zones here. It's either we sell on this zone here, right, or the market retraces down to this zone here, then we sell. So it's very simple. And when we see the market doing that, then we take our rectangle tool again and draw at the current swing point. So you notice that here also now becomes the current swing point here. We have this swing point here. So we are going to get rid of this middle one here, right? So we want to see the market move downward here, then retest or touch this zone here or this zone here. So let's assume the market touches this one, this resistance level here. Then you see the price pushing downward here. So now we take our resistance and we take our rectangle to then draw here, right? So we get rid of this one here. We are always interested in the latest one or the current one. So you notice that we have this one here also, right? So now there's going to be a case whereby price is going to be between them. So if price gets between this key zone and this key zone here, so something like this, it doesn't touch, it just stays between them, right? We don't trade because we want to see the market touch any of them before we do what? We see price pushing downward or sell. So it's very, very simple. So look at real chart examples and see. Let's take a look at this real example here, this real chart example here. So now if you look at this chart example, the current trend of the market is bearish. The current trend of the market is bearish. So we'll be looking for selling opportunities in the market, and we'll be dealing with more of resistance. So now, if you want to note the current swing point here, you notice that this point here is the current swing point, and this point here is the current swing point. So in case you're not seeing that clearly, I always tell you to zoom out your charts. So if you zoom out your chart, you'll be able to see that clearly. So here is the current swing point, and here is the current swing point. So you can just go ahead to take your rectangle tool, then draw here, then draw here also. So once you do that, now you can zoom in your charts. Once you've done that, you can just zoom in your charts and everything will be fine. So now let's see the charts play. So let's see the market playing. So now if you look at this here, you notice that in this example here, you notice that price failed to touch any of these key zones here, this key zone here or this key zone here. Price didn't touch it, and we saw that the market created a new swing point here. So we get rid of this zones here and get rid of these zones here. Then we now deal with the swing point here. So we had this swing point here, right? We had this swing point here, then also had this swing point here, So now let me play the chart. Let me replay it again. So I replay it for you guys to see how this trade went. Now you notice that in this current example here, the market just went in between this key zone here, this particular key zone here, and this key zone here. So it was in between them. It was all what you want to see is that the market touches it, then moves forward. It shouldn't just stay in between them. It must touch it, then move, right? So the market must not, if it stays in between, then we are not going to trade. We are not going to trade in the market. That's how it works. So now we tend to get another swing point here. We get another swing point here. Then get rid of this particular swing point. Now let's see what the market does. Oh, okay, so we were lucky. So we realized that price touched this particular resistance level here, price touched this resistance level here, price touched this resistance level here. So now let's see how the market behaved. I see price respected the resistance level, then you see price coming downward. Wow. So let's see. So now you notice that we have another swing point here. Here is a swing point. So we tend to draw our rectangle over there. So we get our resistance level here also. Then get rid of this one. Now let's play. Wow, you see the market doing that. So we get rid of this one here. Then we have another swing point here. Also, So we tend to take our rectangle too. So just
be taking note of the current swing point. Just be dealing with the current swing point. So just be drawing your rectangle at the current swing point and you will be fine. So you see the market just doing that. The market just doing that. So this is it for the selling or the downtrend market. Now guys, we've come to an end of our lesson on support and resistance. And if you have any question concerning support and resistance, do well to ask in the comment section below, and I'll do my best to answer all of your questions. And now we'll also be making a new video on candlesticks, that's confirming your trades or confirming your analysis or confirming whether a support or a resistance zone is valid for selling or buying. So subscribe to the channel so that you don't miss out on our new video or our upcoming video. Thank you for watching.